The trading floors were silent, not after a closing bell, but because something had gone wrong. Across 3 continents, markets moved, and no algorithm on Earth could explain why. In Frankfurt, numbers spiraled beyond explanation. In Tokyo, a central banker picked up a phone and said nothing. In New York, the index crashed and recovered before anyone could react. And what no one knew was that a single man had just made a decision, not a trade, not an announcement, a decision. And the markets felt it, like a body senses a storm before it arrives. His name was Marcus Hale, and by the time you finished saying it, he had already changed the direction of the global economy. Marcus did not grow up in wealth. He grew up in the kind of neighborhood where wealth was something that happened to other people, something you read about in newspapers that arrived a day late, if they arrived at all. His father worked for a credit union. Small office, smaller salary. Came home smelling of paper and disappointment. His mother kept a ledger for the household, groceries, utilities, rent, with a precision that should have belonged to a treasury department. Marcus watched both of them. He watched his father nod at people who made decisions above his pay grade. He watched his mother stretch $40 across 2 weeks, and he started asking a question that no one around him thought to ask. Where does the money actually go? Not philosophically, mechanically, physically. Where does it go? He was 12 when he first tried to trace a $5 bill, jotted down the serial number, handed it to a store clerk, and spent 3 days imagining its journey. He was 15 when he read his first central banking report and underlined every sentence he didn't understand. By 17, he had filled 4 notebooks with diagrams, flows of capital, chains of lending, arrows connecting institutions across countries he had never visited. His teachers found him strange. His classmates found him boring. His father found him alarming. He got a job at 22 as a data input assistant at a mid-size regional bank. Not because it was glamorous, because it was access. Every day he sat in front of screens full of numbers that were supposed to mean nothing to him, and he made them mean everything. He cross-referenced. He tracked. He noticed patterns in loan approvals that didn't match public policy. He noticed that certain institutions seemed to contract before government announcements, not after. He noticed that money moved in directions that the textbook said it shouldn't. He did not tell anyone. He just kept watching. 3 years in, he had a theory. It wasn't a conspiracy theory. Marcus had no patience for conspiracy. It was a structural theory, clean, mathematical, and it terrified him. Banks, he had concluded, did not own money. They owned the need for money. And whoever controlled that need, whoever positioned themselves as the lender of last resort, the quiet guarantor, the invisible floor beneath the financial system, that person did not need to own a single vault. They just needed to be the one everyone turned to when the vaults ran dry. He wrote it down in a single sentence, underlined it twice, and sat with it for a week. Money isn't power. Control over money is. He was 25 years old, and he had just found the door. He started small, painfully, deliberately small. He took his savings, 4 years of frugal living, every spare dollar redirected, and began investing in struggling institutions, not failing ones, struggling ones. There is a difference. Failing institutions are liabilities. Struggling institutions are opportunities, because they still have the infrastructure, the client relationships, the regulatory licenses. They just need someone to believe in them when no one else does. Marcus believed in them, or rather, he understood what they were worth when no one else was willing to see it. He bought into a small community lender in the Midwest, then a credit cooperative in Central Europe through a quiet investment vehicle he had structured with painstaking care, then a data analytics firm that, on the surface, had nothing to do with banking, but which processed loan application patterns for 11 different financial institutions across 4 countries. That last acquisition was the one that changed everything, because what Marcus discovered, sitting inside that data firm's architecture, was that the financial system was not as complex as it appeared. It was repetitive, cyclical, and at every pressure point, every moment of uncertainty, every institution that needed bridging capital fast, the same small network of lenders appeared, the same quiet names, the same numbers. He started building toward those pressure points. When a minor currency shock hit a cluster of Eastern European banks, every large institution pulled back. The risk models said retreat. The headlines said chaos. Marcus moved forward. He extended capital through 2 investment vehicles, both registered in jurisdictions that ensured privacy without illegality, and within 8 months, 4 banking groups had stabilized. They did not know his name. They knew his terms. His terms were always the same: reasonable interest, long repayment windows, and one quiet clause that said, in careful legal language, that in future moments of distress, they would come to him first. Not exclusively, just first. It seemed like a minor condition. Every single institution signed it without negotiation. Why wouldn't they? He had just saved them. "You don't understand what you gave me," Marcus said once, to nobody, alone in the small apartment he still lived in despite everything. He looked at the clause on the screen. He looked at the names beneath it. He closed the laptop slowly. He understood that the second act had begun. The years that followed were not loud. That was the point. While other financiers bought yachts and gave interviews, Marcus bought silence. He restructured his holdings into a layered network of shell companies and investment funds, each one legitimate, each one audited, each one pointing away from the others like spokes on a wheel with no visible hub. He hired 7 lawyers across 5 countries and told each of them only what they needed to know. He hired a data architect who built him a monitoring system so sophisticated it could detect liquidity stress in a mid-size institution 48 hours before the institution itself noticed. 48 hours. In finance, that is an eternity. With that system, Marcus never chased opportunity. Opportunity came to him because he could see it forming before anyone else could feel it. He would position capital quietly, make a call through an intermediary, and by the time the crisis hit the front pages, Marcus had already been thanked, already been given his clause, and had already moved on to the next pressure point forming somewhere else on the map. The network grew, not like a corporation grows, loudly, with announcements and press releases. It grew the way roots grow, underground, invisibly, reaching toward water. By the time Marcus was 41, his network had equity stakes, data agreements, or first call clauses with financial institutions in 37 countries. He did not own those institutions. He did not need to. What he owned was their dependency. And dependency, he had learned, was the most durable asset in the world. You could seize a building. You could freeze an account. You could not seize the fact that a bank needed him more than it needed anyone else. Governments came to him without knowing they were coming to him. Sovereign wealth funds moved in patterns his models had already anticipated. When one of the largest central banks in the world quietly needed a bridge mechanism during a politically sensitive moment, the capital arrived through a fund 3 layers removed from anything traceable. The central bank's governor told a parliamentary committee it had been a private sector solution. He was not wrong. He just did not know whose private sector. Marcus watched it all from a single monitor. He had stopped expanding his apartment. He had stopped buying things. He ate simply. He slept adequately. He had one ritual. Every Sunday morning he made coffee, opened the monitoring system, and spent 4 hours reading. Not acting, just reading, watching the system breathe. The mistake people make, he told his data architect once, the closest thing he had to a confidant, is thinking that power is something you accumulate. It isn't. Power is something you maintain. The moment you start showing it, you start losing it. The data architect nodded slowly and said nothing. He had worked for Marcus for 11 years and still did not fully understand what he was part of. Then someone noticed. Her name was Dara Osi, financial investigative journalist, based in London, and she had one habit that made her exceptional at her work. She followed money not to its destination, but to its origin. Most journalists traced forward. Dara traced backward. She had been mapping a pattern in emerging market bailouts, specifically why certain distressed institutions recovered with unusual speed and on unusually favorable terms, without any public announcement, without any identifiable lender stepping forward. 14 recoveries, 9 years. The timelines were almost identical. The capital structures had architectural similarities she couldn't name, but could feel. She wrote one sentence in her notebook and circled it 3 times. Same hand, different glove. She started pulling threads. Shell company registrations across Liechtenstein, Luxembourg, the Cayman Islands, all legal, all clean, but connected by a pattern of founding dates and legal firm signatures that pointed, faintly, in the same direction. She found the data analytics firm acquired quietly 8 years earlier. She found the acquisition trail end at a holding company registered in a jurisdiction that was technically transparent, but practically invisible. She could not find a name, but she found the shape of one. She called a source at a European regulatory body and read him 3 of the shell company names. A long silence followed. "Where did you get those?" he said. "Does it matter?" Another silence. Then, "Be careful, Dara. That's not a story. That's a geography. And the person at the center of that geography, if there is a person, has been very deliberate about not being found." She published nothing, but she kept building the map. When Marcus's monitoring system flagged her activity, not by name, but as an anomalous pattern of information requests touching 3 of his outer ring entities within 2 weeks, he did not panic. He had prepared for this. He had always known that invisibility was not permanent. It was, at best, durable. The question was never if someone would notice. The question was what they would find when they did. He spent one Sunday morning not reading the markets. He spent it reading her research trail instead. And by the end of those 4 hours, he had made a decision. He began to disappear. Not dramatically, not overnight, methodically. Over 18 months, he restructured the outer layers of his network, transferred interests, amended clauses, moved the data architecture into a structure that could operate without his direct involvement, not fully, not perfectly, but enough. He closed the apartment. He closed the accounts closest to his real identity. He handed certain operational functions to 3 individuals he had spent years quietly cultivating, people who were brilliant, trustworthy, and had no idea of the full picture. They each held a piece. No one held the whole. When Dara Osi finally published her investigation, meticulously sourced, deeply reported, running across 4 pages, it named every shell company, every connected institution, every suspicious recovery timeline. And at the center of it all was a gap, a deliberate absence. Every thread led to the same point, and then stopped, as if someone had stood at the center of the web, looked up, seen what was coming, and stepped away before the light reached them. The financial world read the piece with alarm and awe. Regulators opened inquiries. 3 governments commissioned reviews. They all found the same thing Dara had found: a structure, a pattern, a methodology. And at the center of it, nothing. No records, no identity, no trace of a man named Marcus Hale, because Marcus Hale, as a legal entity, had been quietly, carefully, completely unwound. The pattern remained. The network still breathed. Capital still moved through it in ways that resisted explanation. Institutions that had signed certain clauses still honored them, not because they were forced to, but because the relationship had become structural, habitual, the way you keep calling a number even after you forget the name attached to it. Somewhere, a man made coffee on a Sunday morning. He opened a screen. He read for 4 hours. He closed the screen. He looked out a window. At what city, in what country, no one could say. And the markets moved, not randomly, not chaotically, just moved. With a rhythm that, if you watched long enough, if you were willing to trace things backward instead of forward, if you were willing to sit with a question that had no clean answer, felt like breathing. If control is invisible, how would you ever know who's really in charge? That question does not belong to Marcus Hale anymore. It belongs to you now. Sit with it. And if this story shifted something in the way you see money and power, hit the like button, subscribe to Wealth Chronicles TV, and drop a comment below. Because every empire has a story, and we are just getting started.